This is Tom Cloud with this week's Precious Metals Market Update. I want to jump right into the first quarter scoreboard and look at what happened in the precious metals world and the stock world, the two that we follow most closely because of relationships that we've seen over the 41 years of doing this since I started this company back in 1976. So first of all, we look at the precious metals. The gold went up 7.8% for the first quarter of 2017. Silver went up 12.5% for the quarter. Palladium went up 19% for the quarter, and platinum went up 6%. So the precious metals went up: gold 7.8%, silver 12.5%, palladium 19%, and platinum 6%. The Dow Jones Industrials went up 4.2%, and the NASDAQ went up 9.4%. So all of them did very well, but especially look at the precious metals as we expect this to continue. We have some very key things coming up. We have the election April 23rd in France. The pro-Trump, pro-leave or exit the EU, she is running behind now, and unless there's a drastic move up, she probably will not win the election in France, which will leave the socialists there, and we'll be in the same situation we are today. But certainly we're going to follow that situation all the way to the end. The other thing I want to bring your attention that is kind of mind-boggling, in 1963, when dimes and quarters were still made of 90% silver, you literally in 1963 would go to the pump and you would pay between 20 and 28 cents per gallon for gasoline. And because there wasn't a credit card situation like there is today, most people would hand 2 dimes or 3 dimes to the attendant for a gallon of gas. So, because it was, like I said, a dime was a dime, and a gallon of gas was 23 to 28 cents during that time period. So that's what it cost. So what does gasoline cost today per gallon? It still costs 20 cents. You can still take a dime. Pre-1964, junk silver as it's called in the market, and those dimes are worth $1.36 a piece with the silver content. So what has changed? A gallon of gas is still 20 cents. It is that enter fiat currency, money by decree, printing money with nothing to back it except the full faith of the government. All it is an evidence of more debt that's out there. We're watching the money supplies grow in the world at 9%. We're talking about every 8 years doubling. Our debt doubles from 20 trillion to 40 trillion. Our liabilities to people from Medicare and Medicaid double from 74 trillion to 150 trillion. Where does this crazy stuff stop? When does the merry-go-round stop? When does Ring Around the Roses stop and you're the one without the chair? You're the one left out there with paper. As I've mentioned on this show before, I talked to a billionaire a few weeks ago. He was referred to talk to me by a friend of his. And he said he woke up in a cold sweat one morning and realized he had 5% of his assets in real estate, or $50 million, and everything else he had was paper. He couldn't get it. It's just a piece of paper with a number on it. Whether it was a stock or a bond, it was a piece of paper with money on it, a number on it. So, as he said, he could not sleep until he bought precious metals and had something that had real value everywhere in the world, going all the way back to the book of Genesis, where gold was money for 4,000 years and then 2,000 years since, approximately 6,000 years minus the 55 years since Nixon took us off the gold standard. Gold is money. Paper was a receipt for real money. You could take $32 in to the Federal Reserve and get your ounce of gold back until 1971. The system has gone haywire, and hopefully you can figure that out, because You can still buy a gallon of gas for 2 dimes. What's changed is the tremendous amount of money created out thin air. This weekend, a big story broke on zero hedge. You should go look at it about the SWIFT system. And if you need the link, if you'll email us or call us at 800-247-2812, we'll be happy to send you the link. But the SWIFT system is about to change. Russia and China are about to lead a contingent of countries to where the money will no longer flow through the SWIFT money system in the U.S. And when that happens, if you don't think the dollar is going down, you're getting some very, very poor economic advice. I can tell you right now, you better be out of bonds. Stocks go either way, depending on what kind of stocks and what they're in. But bonds are going to be hit, and hit hard. We've already seen a hard hit on the bonds since Trump won the election. But we're seeing this money move out of bonds at a very quick pace, and liquidity for bonds is getting terrible. Fed's having to print money to buy bonds because there's not enough buyers. So you need to be sure you're out of the bonds as quick as you can get out of them, or at least cut your exposure dramatically, in our opinion. So read the SWIFT article and realize there are a lot of changes coming in this world, and they're coming quickly. The growth of money is going to expand. Inflation is going to increase. There's probably going to be another interest rate hike in June, which would be terrible for bonds again, because the amount of money being created. And Trump is not dealing. Remember, on March 15th, we no longer have a debt ceiling. Trump is doing the same thing Obama's done. He's out there just continuing to print money, and it's not going through the Senate and Congress and being approved. Maybe once Gorsuch gets approved for the Supreme Court, if he does, and I assume that he will, then maybe we finally deal with this debt problem again. But all of it is huge for gold. You want something with real value that's liquid anywhere in the world, that's going to continue as it has the first quarter, and go up as paper money goes down in the form of inflation and more debt piled on to the already 20 trillion U.S. debt and 74 trillion of future obligations by the U.S. government. So hopefully, if you need to talk to us, we'd advise you to call us at 800-247-2812. That's 800-247-2812. And if you have a self-directed IRA, or want to roll some money out of your 401k and into a precious metals IRA, we'll walk you through and function as your broker and representative. We can't function as a custodian, but we will help you get a custodian to set that up. So hopefully this will be an exciting time, but get your answers now. Don't wait until many people are predicting there'll be even no gold or silver available as early as this year without paying huge premiums, because central banks are not going to be caught without having gold. So you shouldn't either. With this week's Precious Metals Market Update, this is Tom Cloud signing out.